Hello, welcome back to Mining Network. I'm with James Withall, the CEO of Rupert Resources. James, good to see you.
Hi, Peter. Yeah, nice to see you again.
Obviously, big day. You just released the PEA on Ikkari and Pahtavaara. For those who haven't seen the press release, give us an idea of the economics on this.
Yeah, the highlights are pretty good. Look, we've been talking about this being a good quality project, and this is really, the outcome of that and everything that we've been working towards as a team, and in a relatively short time frame as well. So the real headline numbers that everyone care about, the NPV, 5% discount, post-tax, importantly, is $1.6 billion US dollars. Has a payback of around 2 years, probably slightly less than 2 years, which is pretty impressive for it. And the IRR is well north of 45%. So, and this is all at $1,650 US gold price. So, yeah, the headlines they look really good, and look, we're happy to go into some of the detail with it.
This is exciting because obviously from a NPV to gold ounces in the ground, this is one of the best PEAs that the market's seen in a very long time. Maybe you could just break it down a little bit more. You talked about the highlights, but what's the production rate that we're looking at here, and just a bit more flavour?
Looking at the production side of it, it averages over 200,000 ounces over the life of the project. The project's about 22 years of mining and then a couple more years of processing and stockpiles on the back end of that. From the resources we know today, the total extracted ounces for the project is about 4.25 million ounces of gold is actually produced from the project, which is a great result. I mean, it's testament to the discovery we made, but also the conversion of those ounces in the resources into potentially extractable ounces and production ounces. So that's an absolutely key thing. And you mentioned this NPV per ounce. I guess, look, we take the NPV and we allocate that to each of the ounces produced, and it is incredibly impressive. It's over $350 per ounce in terms of the NPV per ounce. I think that really does differentiate itself. But also, the other big differentiator is really if you look at the capex to NPV ratio. I mean, a lot of projects in the gold sector might come out at 1.5 times, maybe 2 times. This is up at 3.5 times. So that's incredibly great place to be in terms of returns that you make on the money that you invest in.
What sort of free cash flow are we expecting to come out of the deposit?
Over the life of the project, looks to be an order of $2.7 billion US dollars. And that first, even look at the first 5 years, it's all over $200 million of net free cash flow after tax per annum. So they're real drivers for the project. But over the life of the project, it's very consistent, robust levels of free cash flow that comes out of it, which again differentiates it from lots of other projects.
So capex at the moment looking at around 400 million, NPV 1.6 billion.
Yeah.
What does the all-in sustaining cost look like? Because this is what, for me, when I first looked at the study, I got quite excited because you've always said that this is going to be an all-weather mine, and it seemed like it is.
Yeah, look, it was all about, we talked about it a lot in previous interviews and things I've talked about. It's about finding a deposit that has better margins than others in the industry, because you need to have much higher margins. Really, certainly in today's world where you just got to make sure that you can demonstrate a really good return for everyone involved, so all the stakeholders of it, both investors, local community. Is it a project that's really robust and is going to be able to ride out the vagaries of the gold price as well? And so if you look at the life of mine all-in sustaining costs for this project, they're below $800 an ounce. In the first 11 years of this project, they're potentially below $600 an ounce. So that really puts you in a position which is exceptional in the industry and allows you to have a really, really robust project, make long-term plans about what you're going to do with the project. And ultimately, it's a proper cornerstone asset for Rupert Resources. Yeah. I
was reading an article not too long ago from Mark Bristow talking about how a lot of the mid-tier companies are struggling with all-in sustaining costs, and obviously inflation's had a real big impact on that. If we do see a period where the gold price declines even down to, say, 1,500 again, a lot of these are going to be in big trouble. Whereas you're in a really unique position here where really no matter what price the gold price goes down to, unless we get to see really all-time lows, this is going to be an extremely profitable business.
Yeah, look, we're put out some sensitivities in the final report, but look, we model it all the way down to $1,300 an ounce, and it still makes good returns. And look, even if you were to, it's a PEA, so it is early stage in terms of understanding the project. But look, we've made sure we've got a realistic power price in here, we've got realistic diesel prices in here for the operation, and in terms of reagents and things like that, the key thing about Ikkari is it's quite a simple project, and so It doesn't require a lot of reagents. It's not complicated. So that, we've used, relatively current price in those things. So we think it's a realistic all-in sustaining cost right now. And so, yeah, absolutely. I think, if you look at it compared to the industry, it's a real standout in that. But what really makes that, and if you come back to, I guess, Mark Bristow's comments, really, it's about the geology, really. It's about the shape of the deposit, the morphology, the cohesive nature of it, and the fact that it is, you have very good grades at surface, but all the way down through the deposit as well. But it's not a narrow vein, skinny gold deposit. It's something that is quite different in the industry. That's what really differentiates it, and that's what drives that cost base.
Well, you said that it's not a skinny vein. Obviously, it's quite a large, cohesive lump of gold, realistically.
So some ways, yeah.
But what you haven't done at the moment is include any of the other satellite deposits or the potential for those. And then you've just announced last month that you've found an extension of mineralisation on Ikkari, which essentially we could be seeing an extension of plunge going down. So maybe you could touch on what this turns into through the drill bit.
Yeah, and I think going back to the beginning, this is, for us, this announcement today is really just putting some numbers on what we've done so far. We only found it 3 years ago. There's an update to the resource today. So the global resources for the company are through 5 million ounces on the back of this as well today. So I think, but it's just a snapshot in time. The resource used for this was actually finished, drilled off, cut off back in May of this year. So you're right. I mean, we haven't included any satellites near Ikkari in this. It does include the Pahtavaara deposit. But look, our best exploration location right now is in and around Ikkari. Through the year, we've announced other drill results at Ikkari North, which we're going to go and test this year, which is only 600-700 meters north of Ikkari right now. We've got the whole Haina South area, which we've got some of the highest grades we've ever drilled, about a kilometre to the west. And then in September, we announced a drill result that's about 32 meters at just over 2.5 grams, down plunge potentially to the east. And that is outside of the resource that we've stated today. And we have all the indications that, that could be an extension deposit. So I think it's about demonstrating the returns potential on the ounces we've discovered today right now. That's what this announcement does. But yeah, no doubt about it, our team is out there exploring to find extensions to Ikkari and finding other parts to this mineralizing system, which could add to the life of this project into the future.
What is a quick win that you could potentially see in the till? I mean, it's at the moment, I think that's been included in the strip ratio, right?
It has, yeah.
But that's, from what I understand from other samples or other drilling that you've done, is pretty much full of gold as well. Is that something that you're looking at potentially incorporating?
Yeah, I guess hopefully it is. Look, I think it's a bit of an unknown. The issue with Ikkari is because of the structural nature, it's quite weathered at the top. So the boundary between till, which is glacial till, which has come from somewhere else, and into the weathered bedrock, we haven't really been able to define that very well. So there's a chance that we can move some of what is potentially waste into that could actually just be weathered basement, which would then have gold in it as well. So look, I mean, that's another part of the upside. And the whole point with the way we've approached this study is not to push the envelope too much. Yep. Just to say, okay, well, that's the strip ratio. Is the strip ratio in the first 5 years of the project is around 2.5 to 1. In the first few years, it's only like 1.6 to 1. So it's pretty exceptional anyway right now. So, and that's with taking all that as waste. So, look, there's a number of things that we can do to optimize the project further in sequencing, in understanding the geotech, looking at the wall steepness angles and things like that. We've been relatively conservative on a series of things, but that's the right thing to do today. But probably the biggest upside that everyone really cares about is there's some more gold to be had over time. And look, we've always said that, these deposits of this scale, we just look at the mineralization potential there, it should continue to grow with time. This project's going to be going through till like 2050, so there's plenty of time to discover more gold right now. I'd like to think it's just the starter right now, and we'll do, as work continues, we'll demonstrate more.
What does next year look like in terms of exploration? And maybe you can even touch on what's next for the company in terms of permitting and next steps for economics as well.
Yeah, so the next year, on the exploration side, we're active now. We have 4 rigs. They're pretty much all at Ikkari right now, and we're just beginning to get into the freeze up. So finally, we can go back drilling from the northern side, which is easier to drill some of the deeps. So, and we can get into Ikkari North as well. So that will begin to happen over between now and Christmas, and then really push on in January. There's a lot of work going on the site, all the augering of the till, and finding out about that till bedrock interface as well. So there's a huge amount of work going on at site. But in terms of permitting, we have our EIA program meeting kickoffs, which is basically the meeting with the authorities and agreeing a program of works that we need to do over the next 12 months to fulfill the requirements of an EIA that we'd submit at the end of that period. At the same time, the company will start working on the pre-feasibility study. Now this bit of work's finished, and that will, works in harmony with the EIA, so that the two documents work together and you submit them together at the end of that process.
How's the exploration model changed over the last few years?
It's been a learning process, the whole thing. Obviously, it didn't exist in people's minds, Ikkari, 3 years ago. So it's amazing how it's a pretty dynamic process relative. I think the last time we spoke, I felt that it moved on significantly at that point in time. I mean, since the resource cut-off, even in May of this year, we've had the whole summer to really, spend a lot of time looking at all the work we've completed today, looking at the new geophysics models we have, some of the deeper areas, and correlating to what actually generates results and what generates good resources. So we I think we now have this potential theory about the plunge to the east that we're going to keep on testing. But also, you step back from that regionally as well, and we've been doing a lot of work on that regional setting, and that's really going to move on over the next few months into the early part of next year, where we reassess, everything that we've understood about Ikkari and why it is there. So, okay, well, how does that fit into this regional picture? So we will, as ever, we tend to have one drill rig always testing other things outside Ikkari as well to follow up some of these theories. So, that's another bit of we're still an exploration company at heart for our geological team. So there, let's see what some of those deliver as well. But yeah, it's changed. It's completely changed. It's really where we're at with it. But that's the process, and our team encourage them to keep on learning and to keep on improving that understanding.
How many meters are you planning next year, and how much of that is focusing on testing this down plunge extent of Ikkari?
We need to drill about 22,000 meters at Ikkari itself to continue that conversion. We converted 84% of the inferred resources into indicated. We want to convert as much of the rest of the original resources into indicated for the PFS, because you have to have that level to be able to convert to reserves. That's one allocation. We've already done some of that, maybe 8,000 meters of that drilling. And then beyond that, we still have in the order of 30,000 meters available for us to drill in and around Ikkari and what we call exploration at Ikkari between now and early parts of next year, first few months of next year. But I think we originally said in the order of 70,000 meters from, I guess, July this year through to the end of April. So there's other meters in there that can be allocated as required to either new discoveries potentially or more work at Ikkari itself.
How many assays are we waiting on to come back at the moment?
But always have a backlog of maybe a month or so, and we drill a month to 6 weeks, and we're drilling in the order of 4,500, 5,000 meters a month. So yeah, you could say there's 6,000 meters worth of assays probably in the labs.
Maybe you could run us through the mine plan of the project, and are you still evaluating, obviously with PEA stage, it's not definitive in terms of the path you have to go down. What other paths might there be? Through
this process, we've been looking at a broad range of potential options how to develop it. Right now, it looks, the PEA presents it as about 11 years as an open pit operation, and then another 11 years as an underground mining operation using sublevel caving. We through our process of evaluation over the next year, and even through this year, we've still looked at other options, maybe changing the size of the open pit, changing the underground method. And all of that is really driven around, trying to get as much understanding now as potential ways to develop it that we can study as part of the PFS, and ensure that we understand those variabilities with the EIA program work we're doing, and make sure that we provide the authorities with the most information on all these different options so we can evaluate what's the best solution. Again, look on the waste management side, we're looking at a co-disposal facility, so it's all filtered dry tailings, commingled with the waste, We think that is potentially the best environmental solution for the project long term. So we'll be looking at that, but also at the same time, we'll probably still look at other potential tailings methods as well. So it's making sure you, all the way through this process, is making sure that you consider a broad range of options as you develop the projects going forward. The numbers today and the PEA is going to shows you what it might look in one option, but over the next 12 months, we'll consider what might be other optimal solutions for the project.
In that time frame as well, there may be, like we were talking about, other satellite deposits. There may be more ounces. So this could look different, right? Just from the exploration work you're doing at the moment.
Yeah, look, and that's why our team are, it's a bit of a rush on really now over this winter to make sure, is there anything else that might be in the immediate vicinity of Ikkari, because that will affect all those plans as well. It'll affect where you put your waste down. Right now we've got one drill rig just doing condemnation drilling, looking for an open space area that doesn't have mineralization to put all the waste facilities. So, in that process, in some ways you hope not to find anything, but then again, if you do find anything, it's not a bad thing either. Yeah. But it does then mean that you have to rethink it. But the time to do that work is now. Not, go down the permitting route, do that, and then think, we're going to put the waste up there, drill a few holes, and then, no, there's something underneath it. It's about trying to get in front of all that hydrogeology, get in front of that, get in front of any issues that the project might have as early as possible.
Most of the holes that you have drilled usually do, especially around Ikkari, do usually hit. So it's not a bad problem to have in a way that you're really trying to find somewhere where there isn't gold around the project.
Yeah. I mean, that's not the only reason you're trying to understand the rock mass, but ultimately, yes, it's about, it's important to do that today and not be doing it in a year's time from now. It's very hard to go back in the processing side, and we're very engaged with the authorities, land use planning authorities, all that sort of process. A lot of stakeholder meetings going on at this time of the year as well. Making sure everyone understands what the project might look like, and be very open in that. That's been our approach to it. But the more information we can collect today on a whole range of aspects, be it environmental, geological, engineering-wise, allows us to have a much better communication path and much better conversations with those permitting authorities and everyone involved, shareholders as well.
Now you're at the PEA stage, that you have some economics around this. There's line of sight or potential lines of sight on how this might be developed, how it might impact the community. Obviously, it gets to this stage where investors now start asking questions around ESG usually, or especially more questions. Yeah. What confidence do you have that this is permittable, the stakeholder relations are going to be managed correctly, the power is going to come from renewable sources or ethical sources, and this is going to be mined in the right way? What sort of systems are you setting up at the moment? How's this going to work?
Well, we've been building up our team on that side for a number of years. We started all our environmental monitoring, baseline monitoring in Ikkari in 2018. Across project-wide, we've been doing that since 2017. And look, we feel we've been put ourselves in the best possible position, and that's really my instructions to the team. We've built up our environmental team, environmental manager, Anina has now brought on 2 people to work with her to expand that team. It's really the permitting team to understand those aspects. And there's so much interaction between them and geology and all these people, you have to make that work. And you can, even in our country manager, has been keeping all the local municipalities up to date, regional municipalities and some on the national level. All you can really do to make sure you have confidence in that is to make sure you open the lines of communication early and collect the information earlier and present it to partners. The project isn't in a Natura area, which is good. It's not in a protected area. It's in an area which is currently used for forestry, and then commercial reindeer herding in the region. So there will be a change of land use, but it's not. We don't feel it's in an area that couldn't become a mine. It's only 5 kilometres from the road. It's about 5 kilometres from the power. So I said, on the renewable power situation, they're continuing to expand the amount of renewable power in northern Scandinavia and Finland through wind and hydro. So and then obviously low CO2 power with the expansion of the nuclear plants as well. So there's going to be, there should be a source of basically very low CO2 power for the region, which does again differentiates the project. And over the next 12 months, we'll shortly present a sustainability report on the company, where we stand today. And over the next 12 months, we'll update that, and we'll spend a lot of time understanding, the overall impact of the project, be that on the emissions side, but also on the local communities and how it affects everyone involved in it. So, yeah, it's become a pretty large part of our business, as it should be. So, it's pretty all-encompassing approach is what we're trying to come up with. But make sure we, again, just like on the geology when we're doing the exploration, we were very thorough, trying to leave sort of no stone unturned. It's just the same approach as that. Just keep on being very thorough.
James, thanks for your time.
No, thanks very much.